Hey, this is Arthur Hill, Chief Technical Strategist here at TrendInvestorPro.com. It is Thursday, October 26th, and you are tuned into a video on our YouTube channel. If you like this video, please give us a thumbs up and consider subscribing. So today I want to talk about alternatives outside of the stock market. And that is simply because we are in a bear market. And in a bear market, the odds are simply stacked against us as far as successfully picking stocks to buy and make money on the long side. Therefore, I think it's more prudent to either be in cash or look for alternatives. And so we're going to look at a little perf chart that shows you three alternatives that are performing well since the September peak in stocks. And we'll look at one of those which has a bullish continuation pattern working. So I want to first show you a perf chart, and this has 10 different assets, basically ETFs that are based on different assets. On the left, you can see we got base metals, we've got agriculture, we've got energy, then we've got gold, silver, real estate REITs, then we have the dollar, the euro, the S&P 500, SPDR, SPY, and bonds. And what you see on this chart is stocks and bonds are both down sharply since the beginning of September. Bonds, the natural alternative to stocks, are not working right now. And that, of course, is because of inflation. The regime has changed. We can also see the euro is not an alternative. The dollar is strong, so that's one alternative. REITs, no alternative. Silver, not an alternative. Look at that, gold and oil, energy. This is oil and gasoline, basically. Those are both up. So gold and energy are alternatives to consider as far as an alternative to stocks. And then we can see agriculture down a little bit, so maybe there's something there. Base metals down a little bit as well, but still, tied to the economy. And if the stock market is going down, that's a negative for the economy, so I don't want to be involved in base metals, I don't think. But what I do want to look at is, say, energy and gold. And in Chart Trader on Thursday, I highlighted some weekly charts for oil and gold and showed you some prognoses for those two. And today I want to look at USO, the oil ETF. So here is the US Oil Fund ETF using Stock Charts ACP. And the first thing we want to point out is that the trend is up. The big trend is up. Because we can see here when stocks started turning down in July and moved lower, look at oil. It moved up. It broke out there in the middle part of August. We had a little throwback and then a big surge to a new high there above 80. So a 52-week high in oil. And if we look at the indicator window, we can see right before the breakout, the trend composite turned bullish there in the latter part of July. And then we got confirmation on the chart with the price breakout. So, you can call this a double bottom. You can call this some sort of rounding bottom. But clearly there's some sort of basing process. Clearly there's a breakout and a follow through after that breakout. So the bigger trend is up, and that means the trading bias is bullish. And what does that mean when the trading bias is bullish? Well, that means we want to look for bullish setups. We want to look for further upside. We want to ignore bearish setups as long as the bigger trend is up, because that is the path of least resistance. And if we look at this chart here, we got a big surge here, and then we've got a potential pennant taking shape. And that is a short-term bullish continuation pattern. Basically, you became short-term overbought after this big advance. We had the really sharp decline in early October, and then the big bounce, and that was, of course, predicated on those tensions in the Middle East flaring up. And now we're in this consolidation phase. And it's a consolidation above the breakout. It's a consolidation after a big surge. So typically a consolidation is a continuation pattern. The prior move was up, so this favors a break to the upside. And if we break out here in the low 80s, I think that's going to target a move to the 100 area for USO. So here at Trend Investor Pro, we have two offerings. First, we have System Trader, and that offers two rotation strategies that trade stocks in the S&P 500 and NASDAQ 100. Those strategies went to cash in early October because our market timing mechanism turned bearish. We do have a mean reversion strategy trading stocks in the Russell 1000 that is still active. And then we have Chart Trader, which is basically what you were seeing today, where I go through the charts, I look at the broad market environment, I look for setups that are in harmony with the broad market environment. That would be bearish setups in a bear market and looking for alternatives to stocks. So Chart Trader is published every Tuesday and Thursday before the open. Each report does include a video to put a little color on the commentary, if you will. And in today's report on Thursday, I put forth some downside targets for SPY, QQQ, and IWM. Small caps remain the weakest of the group as far as the major indexes are concerned. So you can learn how to use the measured move for a downside target projection for the big three. And of course, I covered gold, oil, XES, the Oil and Gas Equipment Services SPDR, and we're also looking at natural gas and a potential resistance level for Nike. So check out Chart Trader at trendinvestorpro.com if you'd like to know more. So that concludes our report for Thursday, October 26th. Again, thanks very much for tuning in to this video on our YouTube channel. If you like this video, please give us a thumbs up and consider subscribing. Thanks again and take care.